Good morning, everyone, and welcome to the European Crossover webinar. And we did have some data that just came out. And that was market manufacturing final PMI for the Eurozone came in at 53.8, just a bit better than the expected 53.6. And also Italian GDP final quarter-on-quarter Q3 GDP came in at 15.9%, just a hair under the expected 16.1%. And we did get German employment data. Employment rate came in at 6.1%, just a tad bit lower than the expected 6.3%. And then early we got a couple hours ago, we got UK nationwide housing prices came in a bit better. Spanish manufacturing PMI came in just a hair under that 50. And then, of course, Italian market manufacturing PMI at 51.5, just a hair under the expected 52. And French, just a hair bit better at 49.6. At the bottom of the hour, we'll have UK manufacturing PMI final. They're expecting 55.2. And at the top of this next hour, we'll get Eurozone flash HICP. Consumer prices, and they're looking at -0.2. And then later today, we will get New Zealand dairy prices, as well as Canadian GDP. And also at 9:30 Eastern, we'll get Canadian market PMI. And at 9:45 Eastern, we will get U.S. manufacturing PMI final with construction spending and ISM manufacturing PMI, which should be a mover. That'll be at 10 a.m. Eastern, along with sub-indexes like employment, ISM. Taking a look at where we stand, we did go on and come back. Bear with me. We saw a good move back here in the NASDAQ. We can also take a look at the S&Ps, but here's the S&Ps here. But you can see after reaching what was, we remember our bull flag target was 12,232, and we got to 12,237 on Sunday evening, and then we saw a pretty good pullback. And boy, did we come off, and then we turned around and started rebounding. And we saw this market really make a move. I mean, I was looking for this to go a little bit higher, a little bit higher. Wasn't sure where it would stop. I was mentioning about the 264. I did see that they could get up to about potentially around 280. Well, they made it all the way up here, just above the 280, but to 290, actually, but to 295 before coming back down to 239 and then turn around and really moving higher. And boy, did they really put the afterburners here in the after hours, really added on to that. And you can see how we continue to move higher. We've made it just about up here to the 12,406, which is 127% extension of this high to low. And take a look at the S&Ps. Also pretty nice move up here higher too. But you can see how well the NASDAQ was able to move. And you can see here we came back. You can see here pretty much close to the solar exponential moving average on the 30-minute. Still pushing up here. And we can just take a quick look-see on where we stand here in FX. Euro dollar back up here at 1977. We did close sub to 1941, which would allow for a dip back. I think this is right here is where we actually have resistance for today. I'll have to pull up the notes. We'll take a look at the cable. Wow, we took out 33.82. That's huge. Look at that. And we'll see where we stand here with the Aussie. And take a look here with the dollar index. Taking that dip again. We did hold our bias chart support yesterday. We had 91.54. The low was 91.51. And obviously with indices up here, that's helped setting the tone for the move we've seen in the majors. So let's take a look where we sit here on the news. So the Australian and New Zealand dollars resumed climb on upbeat economic data. The Australian and New Zealand dollars were edging higher again on Tuesday, shaking off a bout of profit taking. You can see here with the Aussie. Take a look where the Kiwi is. The Aussie firmed to 73.66, having reached a 3-month peak of 74.08 overnight, only to meet stiff resistance at the September top of 74.13. A break there would take it back to levels not seen since mid-2018. The Kiwi pushed back up to 70.37, having already reached its highest since June of 2018 at 70.51. The currency surged 6% in November, and overbought technical signals point to the need for some consolidation. Australian economic data were again upbeat with a revival in housing prices and home building, boding well for economic recovery. Now the nation is largely coronavirus free. The RBA noted the run of better news while leaving the rates at 0.1% after its December policy meeting on Tuesday. Having eased policy in November, analysts assumed it will be on hold for at least a few months to see how growth fares. The lesson globally has been that activity bounces back sharply once the virus control is achieved and contained restrictions are eased, NAB economist Tapas Strickland said. Encouraging news on vaccine trials suggests the medium-term outlook for growth will continue to improve. Australia's relative economic success has kept the 10-year bond yields up at 92%, while U.S. 92 tenths, that is, while U.S. yields have drifted down to 85 tenths, widening the Aussie's rate advantage. Also supporting the currency has been the strength in prices for some Australian major export earners. The commodity story remains incredibly supportive for the Aussie dollar, with copper, aluminum, and iron ore all surging on expectations of green waves of investments, said Richard Franovich of Westpac. The dollar loses some bounce as the focus shifts to the Fed. And under pressure as the U.S. dollar handed back part of its month-end bounce on Tuesdays, investors reckoned on more monetary easing by the Federal Reserve and a gathering recovery elsewhere. The risk-sensitive Australian New Zealand dollars edged higher with the Aussie up 0.3, Kiwi up 0.5%, and the Euro rose 0.3, though all three currencies remain below where they sat on Monday's dollar bounce. Sterling crept higher as traders clung to hopes for a Brexit deal before the year's end, and the yen is down to a week low as equities rose with the broadly upbeat mood. Investors are heavily short dollars as optimism about promising vaccine trials drives a buying of riskier assets and higher yielding assets outside the U.S. Even more worries about rising coronavirus cases have not offered too much support for the greenback as speculation grows that the Federal Reserve might act to support the economy through a tough winter before vaccine can turn the tide on the pandemic. There's a general view that something in the December meeting, given that there's a real fiscal development in the last few months, said BNZ senior markets strategist Jason Wong. The Fed meets to set policy on December 15th and 16th. And though before then, on Tuesday and Wednesday, Fed Chair Jerome Powell will appear before Congress, and his remarks will be closely watched for any clues as to the next moves. The policymakers gather as authorities mull approving two effective vaccines developed by Pfizer and Moderna for distribution, while at the same time, surging virus cases have put the brakes on the U.S. economic recovery. Powell, in prepared remarks released on Monday, said a challenging few months lie ahead and that it's difficult to assess the economic implications of vaccine development yet. A full economic recovery is unlikely until people are confident that it's able to re-engage in a broad range of activities. Against the basket of currencies was softer. The dollar was a bit softer at 91.82 after struggling to find traction above 92 on Monday. Elsewhere in Asia, the Chinese yuan was on the back foot, holding firm offshore and snapping 3 sessions of losses in offshore trade after decade-high factory activity growth figures and underscored China's remarkable recovery. The RBA, meanwhile, left policy rates unchanged on Tuesday as expected. Government fell low. Statement was cautiously optimistic, but said it would take until the end of the year for gross domestic product to recover 2019 levels. Britain and European Union also warned each other on Monday there was time running out to reach a Brexit trade deal, although investors remain hopeful and have kept the pound at 33.61 and 89.46 pence per euro. Talks between EU chief negotiator Marco Barnier and Brexit negotiator David Frost are ongoing, and EU team are expected to stay in London for 2 or 3 more days. Further talk that we could see a deal in the next few days makes shorting the pound tough, said Chris Weston, head of research at brokerage firm Pepper's firm. Although once we get a deal, and assuming it does play out, sterling may offer some good shorting opportunity as it turns less political and stands out as a funding currency. The fiscal situation makes for some incredibly sobering reading. Bitcoin was down about 2%. And at 19,354, just below a record high of 19,864 on Monday. So, as I mentioned, we'll move this out of the way. We've had a pretty good run here, and we'll look at the equities, but like I told people, is if you're going to trade the indices, you really have to look at the cash equities. And, some people were thinking, oh, we're going to see a sell-off. And, certainly we did go on to get this pullback here, but I'm saying once we got into this part of the day, people think, oh, it's going to fall. It's going to fall. And I kept saying, I had actually stepped in and shorted myself at 64. And, but Facebook had turned around and grabbed a leg above 275 and really got scooting. Only on the pullback, I was able to get out with just a few ticks. And I thought, okay, we may even make it down to 239, which we did. But actually, we bounced before we eventually came down there. And boy, did we turn around and took off. And then the after hours was just something else. I mean, just really something else. So let's go on and move into the analysis. Bear with me. I did want to take a quick screenshot of the data for the morning. There we go. Miro says if we can look at NVIDIA, natural gas, and platinum. Yeah, we'll take a look at that, Miro. I'll tell you what, we'll start off with the NVIDIA, and then we'll come back later to natural gas and platinum. So yeah, let me take a look at that for you. So let's go with that real quickly. And bear with me. So here's NVIDIA, and we'll look at it on the daily. So bear with me. So we saw a nice little bounce back right here. You can see that here. And really coming into support. You see, let me get rid of this. See right here, this body right there where the arrow is, and that body, see right there, look at this. See how we came into there? And we came down here and we found support, and look how we popped back up. Now, what I want to do is look at what I do is I look at the 30-minute during the day. Of course, we're in the after hours, but look how we came powering back. So here we are on Monday. Things look pretty bleak. We get going. We kept pushing higher. And then right here, we took out this area on the 30-minute. You see right there? That really opened the door for them to move higher. And boy, move higher we have. And then in the after hours, we kept it going. Look at that. So they're really keeping the pressure on. And NVIDIA is a good little momentum mover. It'll usually spark things, but I'll tell you what, Facebook really does spark things. And here we were in Facebook. We'll take a look at how it settled for the day. Same thing here with Facebook. Now, we do need to get above essentially 278, but you can see here, see, we were in the dumps early in the morning, and look, we pushed up here towards this 274, and then we rolled back. And once we got above that 274, basically 279, we got going. And actually, I got short, and it wasn't until I realized, I go, oh no, Facebook is, running. And I thought, well, this isn't good, because Facebook really does generate some momentum. And certainly, I ended up getting myself underwater. I came out okay. Okay with just to make a few ticks, and that's better than taking a loss. But you can see here, we came back. When we came back down here, fortunately, I was able to go on and get out somewhere around, I'm saying when we made the move down here, it allowed the NASDAQ to come lower. But you can see here, we came down here to test the breakout, and look what we've done. We've added, come back, and then even added further. And look, we're on our highs right now. The key would be as if, well, heck, we're at 279 right now, 278.70. So we've really got going here on this Facebook. My biggest concern was really with Amazon, because I'm wondering how these cyber sales will go. I don't think they're going to go that good, but like I said, it is what it is. You can see here, they're at, wow, 30. They closed at 31.68, and look at them now at 31.90. And this was another one. We look at the 30-minute, and it was under some good pressure. And we kept bouncing up here. We made it up to 31.68. And then I think we made it to 31.72. We dipped back, and look at us now, basically 31.90. So that really keeps that pressure on. We'll see what happens. And take a look at Apple. We challenged that 121 and we faded. We're back up here towards that 121 again. But that's the deal on NVIDIA. So let's go in and get started on the analysis for FX. Oh, IWM, that's not one that I really follow. I can try and take a look at that, but hang on. Okay, so let's go and get started on FX, and we'll get to these other ones later. Yeah, when I'm following the individual equities, I'm looking at NASDAQ, and those ones I look at are the, like I call them, the big eight. They're the ones that have the most impact, would be Apple, Microsoft, Amazon, Google, NVIDIA, Facebook, Tesla, Netflix. But I also know Intel's in there, but I don't pay too much attention to the Intel anymore. But anyway, let's move on to the euro dollar. So the euro dollar closed sub 1941. You can see that that's a key weekly breakout, but we did pull back, opening an opportunity for a corrective pullback. Support will be 1882 with resistance at 1973. And you can see where we're at. So we'll stick with what we said, 1973. And if we were to dip back, 1882. And onto the cable. Well, we did pop up above 33.82, but we're back below it. So cable once again was thwarted by 33.82. The pair is open to a minor correction. Initial support will be 32.74 with resistance at 33.82. We did pop up, look at that, but we're back below 33.82 again. So 32.74, 33.82. On to the Aussie dollar. So the Aussie posted a bearish engulfing daily bar. See that? We engulfed the other one. Opening the door for a pullback to 72.70. Resistance will be 73.86. And I think we came up short of the 73.86 here. So it's going to be 72.70. 73.86 for resistance. And onto the Kiwi, we do have dairy prices later on. So the Kiwi posted a tight range day on Monday. Resistance will remain 70.64. I don't know, I had this 70.28, and once again, somehow I messed things up over the weekend. I noticed that, like when I looked at the notes, it was all messed up, but it should have been 70.64. So once again, let's go back in here. We supported 69.46, followed by 69. So I think the 74.28 may have been correct. I don't know, but it should have been, I believe, 70.64. But anyway, 70.64 with support of 69.46. And on to the dollar CAD. So the dollar CAD, posted a hammer on Monday. You can see that here. After dipping towards the weekly support level, which was 29.09. Support on Tuesday will be 29.46 with resistance at 30.50. 29.54 was our initial, but we had weekly support at 29.09. So it's going to be 29.46 and resistance 30.50. Doesn't look like it's heading that way. The dollar peso continues to defend the 20-cent area. Resistance for the pair to scale will be 20.31. We supported 20.06, and we're at 20.06 right now. So and onto the dollar yen. The dollar yen was able to defend the 372 support on Monday, bullishly engulfing the Friday close. You can see that here. Resistance on Tuesday will be 463 with support at 398. We're trapped in a tight range. And onto the dollar index. So the dollar index defended Monday's bias chart support at 91.54. The low was 91.51 before rallying to 92 even. Resistance for Tuesday will be 92.34 with support at 91.72. Well, we're not doing too good. We're even below the 91.72. But we'll stay with that 91.72. It's below it though. 55.6 for the UK data. and resistance at 92.34, and this does not look good. And for the cross rates, well, this thing has continued to move higher, and we had a resistance of 73.58. We're going to keep that there, and the 72.52. We're going to have to move that higher, and that'll be right there. You see right here, this body, that's going to be 72.93. On to the euro pound. Now we had 89.45 from yesterday as our support. You can see here, but we've taken another dip. Support's going to be right here. You see this wick right here, and you see that wick right here, and this. So we're looking for confluence. So right there, 89.17. Looks like we're kind of holding though, and the low so far has been 89.28, and resistance, the old 89.68. Onto the euro odd. Well, we added on to these gains here, and we actually had our resistance at 62.45. We were able to scale that, and we're making a move here. I don't think it will necessarily make it to 63.17 in one fell swoop, but we do see that we've got this wick here, which is 62.78, and then this body right here, which is 62.95, and this wick here, which is 62.86. So we'll split the difference and we'll say 62.86 for today's resistance. And for support, boy, this worked out pretty well. I mean, I'm saying the way they dipped and it came back to this wick, you see that? That was perfect. So if they were to retreat, I don't think they're going to. It would be here at 62.10. That would be like if things really start to come apart. And to the Euro Kiwi. Well, this thing is still looking horrible, but in a very, very tight range. So we had 69.58. Now need to change that, and 70.36. That will remain the same. We're trading in a very tight range here. Look at that. You think this was like on a 5-minute chart, and it's on a daily. Let's go and move in now to the ASEAN. So on the upside, we had 77.34. It got stuck and wasn't able to take out that 77.10. And you can see here, we've come back up here again. So keep it in check. It would actually blow some stops if we got past that 77.10. Thought we had a little bit more juice behind it, but it didn't. So let's scale this back for 77.10. And support, keeping it simple, 76.47. So it looks like they're still stuck in that range. On to the guppy. Well, certainly we saw good strength this morning, and you can see where they went to, the 39.73, and they took it out just by a hair and came back. We're going to use that as our resistance, and that looks pretty solid for right now. At least if you were shorting it, you know where you would want to, you'd be wrong. if you want to take a stab, think we're going to see it pair back. And support will just go, you can see this wick here. I think we have to go a little bit lower than that, which should be 38.83. Let's pull in a 2 hour. If we saw a pullback, they're holding up pretty good though. You can see here this wick and these bodies here. So, okay, then that 38.80 really comes in at 38.87. So let's go with that, 38.87. On to the sterling odd. We're just trading within this range, although we've got some nice, you can see right there, but we're smack dab in the middle. You see that? So without going overboard, we'll go across these wicks, which is going to be 82.26. And on the downside, see these touches coming across here, and this body, and this wick, 80.71. And your dollar's at 19.76. Still holding up well. We'll take a look if we see anything on IWM. Make it easier if we just go. We actually have a little bit of almost like a little island here. You see that? That is a little bit concerning because you can see here we gapped up. Okay, so we have like a little bit of a spinning top here, and we kind of held here. It's open for a pullback. Support's going to come in right there across that body, which is confluences with this low here. See that body right there? That's going to be your support. And that would be 78.54. But you can see here, this gap was basically like an island. It did come down here to fill this little gap here, but the initial support is going to be right there. 78.45. But look at this. It jumped here. Came in here and filled this. Closed up here. And again up here. This would actually be considered potentially an evening star. And then we kind of held here. Still kind of sat. We took a dip. It'll be interesting to see how this plays out. But it's had one heck of a run. It is, I would imagine, pretty well overdone. Take a look at a 2-hour chart. But this is where I would see them potentially come down to 78.45, and that's on a 2-hour. And you mentioned natural gas. Well, we've talked about this, and you can see how many times they've come back down to this level. You see how key those bodies are? You see that? There we go. In this case, it might be better to look at it on the 2-hour chart. Looks like they do want to come back here towards this 287.6. So they got above 295, but they've made multiple stabs here above 295. They finally got a little bit of a close here, but they haven't been able to hang on. They started to slide right back down. Support's going to be right there at 287.4. And you can see that's been fairly key. They might be able to push a little bit some stops. So I'd say down here to 286.6. And going back to, we looked once before, I believe, at a weekly. So you look at a weekly there, the week just started, but you can see here another push up here, but we're on the lower end. We'll take a look at platinum. That's on a weekly. Boy, this thing is really going. This is the key area for platinum right here. Right there. See that body and that confluence with this wick and this wick. So 989.2 and we're 984. This would be huge if we were to close above 989. Well, actually, essentially 990 on a daily close. We're pushing up against that limit, but we're stretched. That'd be huge. I'm not sure if they'll be able to hold that up. Obviously, the support's going to be these two bodies here, which would be 969. And if you take a look at it on a 2-hour chart, immediate support is going to be 980. And that'll be it. We'll just go and take a quick look where we stand on the indices. And you can see here, we're just hanging around here. This 12,406. Take a look at it on a 2-hour chart. And I just don't see the jury coming out yet until we get some figures on these Cyber Monday sales. I think that Amazon was really dragging yesterday, although Apple was still fairly strong throughout the day. But I think that if we get some poor cyber sales, that could kind of weaken us. December looks like it's going to be a tough month for the overall economy. Not that this responds very well, but I'm just thinking is it might have a tough time. It may even impact. I think if you see this impact for online sales, you're going to see Nasdaq being impacted. There has been some talk about trying to get some stimulus going. We'll see what happens. That may help it hold it up here, but certainly you can't deny that we came back. Look at that. We came back. So you got to give the, the onus goes to the bears to disprove what's happening, because look, this comeback looking pretty solid. And boy, if we get above 406 and get a foothold, boy, we could really get going. The only thing, like I said, to me, the fly in the ointment would be see how these Cyber Monday sales go, because foot traffic in the stores on Black Friday was down 52% from the year before. So it really opened the door for us to pull back, and this whole reallocation. But for them to come back like down the close and even add to it in the after hours is a pretty big deal. So with that, that'll be it for the webinar. Mira says yes. Thanks, Mira. Yeah, thanks to you too. And we'll post the buys chart and see you in the chat room.